The year was 1999 and the world was partying like never before. We were standing at the edge of a new millennium. The internet had arrived and it promised to change everything. It was a time of extreme optimism. If you had an idea and put a .com at the end of it, you were instantly rich. You did not need a product, you did not need a profit. You did not even need a business plan. All you needed was a website and a cool name. This is the story of the .com bubble. It was the moment when Wall Street stopped looking at numbers and started looking at dreams. And just like every dream, it ended with a rude awakening. To understand this madness, we have to look at the atmosphere of the late 90s. Personal computers were suddenly in every home. The internet was no longer just for scientists or geeks. It was for everyone. Investors saw this and they went crazy. They believed that the old rules of economics were dead. They said profits do not matter anymore. Only growth matters. They called it the new economy. Young kids in their 20s became billionaires overnight. Companies that were losing millions of dollars a year went public on the stock market and their value tripled in a single day. Let's look at the most famous example, Pets.com. They sold dog food and cat toys online. They had a funny mascot, a sock puppet that became a celebrity. They spent millions of dollars on advertising. They even bought a commercial during the Super Bowl, which cost over $2 million. There was just one problem. They were losing money on every single bag of dog food they sold. The shipping cost was higher than the profit, but nobody cared. Investors kept throwing money at them, believing that eventually it would figure it out. The Nasdaq stock index, which is full of technology companies, skyrocketed. It went from 1,000 points to 5,000 points in just a few years. Taxi drivers were giving stock tips. Grandmothers were day trading from their living rooms. Everyone was afraid of missing out on the digital gold rush. People quit their steady jobs to become day traders. It felt like the party would never end. But in March 2000, the music stopped. It started with a few articles in financial magazines asking tough questions. Where is the profit? When will these companies actually make money? Suddenly the mood changed. Japan entered a recession. The US courts declared Microsoft a monopoly. Fear replaced greed. On March 10, 2000, the Nasdaq hit its peak and then it started to fall. And it did not stop falling for 2 years. The bubble burst with violent force. Companies like Pets.com went from being worth millions to being worth zero in months. They went bankrupt and vanished. Trillions of dollars of wealth were wiped out. Investors who had put their retirement savings into tech stocks lost everything. San Francisco, which had been the center of the boom, turned into a ghost town of empty offices. Expensive office chairs and servers were being sold on the sidewalk for pennies. That the .com bubble is different from other crashes we talked about. It was not all a lie. The internet really did change the world. Some companies survived the crash. Amazon lost 90% of its value, but it survived. Google and eBay survived. The crash cleared out the garbage and left the strong companies standing. That the lesson of the .com bubble is crucial for us today. Technology is real, that valuation matters. Just because an innovation is revolutionary does not mean every company in that sector will succeed. We see the same pattern today with artificial intelligence and cryptocurrency. We see companies with no revenue reaching billion-dollar valuations. We see hype replacing logic. History is flashing a warning sign. This is why you need to subscribe to this channel. Financial literacy is not just about reading charts, it is about understanding history. By blending financial knowledge with the lessons of the past, you develop foresight. You learn to see the cliff before everyone else runs off it. If you want to sharpen your instincts and protect your wealth, hit that subscribe button right now. The .com crash taught us that this time is different are the four most dangerous words in finance. The internet changed our lives, but the laws of gravity still apply to money. Those who ignored the fundamentals got burned. Those who understood the difference between price and value survive. So look at your portfolio today. Are you investing in real businesses or are you investing in hype? Because when the tide goes out, we will see who has been swimming naked. In our next video, we are going to leave the digital world and go back to the 18th century. We will talk about a man who was a gambler, a murderer, and a financial genius all at once. He printed so much money that he literally bankrupted an entire country. His name was John Law, and you do not want to miss his story. See you in the next one.